Stop doing this. Let me show the biggest iPhone mistake made by old people. Always using it with full storage.
All right. All right. Good evening, everyone. All right. So right now, time is 8:03. We're starting in 2 minutes, and welcome for all the returnee. And yep. So from now till 8:05, there's another 2 minutes. So just get yourself ready, and then let me do a quick check from all the different channels. All right. All right. Hopes everything looking good through the screen, and then the sounds, everything is great. All right. So I believe everyone it's been quite a good week since last week till now. There's a lot of good news. There's a lot of positive, encouraging news for various countries, various companies, and I think various portfolio as well. All right. All right. So let's do a quick last check. All right. Looks good. All right. Things are great. Okay. Now it's 8:04. Never mind. Let's start now. All right. Welcome, everyone. Welcome back to our weekly Well Pulse every Tuesday, 8 p.m. So this is a session whereby we updates everyone with the latest market updates and also companies that release their results. And if there's not earning seasons, we will look into some companies that are interesting. So to expand our circle of competence. So in the end of the day, what we're going to do is to increase our confidence dealing with market volatility. And in the end of the day, what we want to have is a stable, growing portfolio. So this is the objective of WellPulse, and welcome everyone for coming back. So if you are first time tuning in, not to worry, we will share it in details. What are we doing for the next 1 hour? And there's a portion where we will go into the private community, but not worry, the private portions, I'll show you how to join in. But before that, I'll just show you some lights of what we'll be talking inside the private community. All right, so without further ado, let's start our pulse. Okay, wow, some of you guys streaming in. So once again, I'll encourage you guys to click like buttons so that the algo knows that people like you also like to watch the channel. So to help me to reach out to more people. So before you start, remember to click likes. And of course, in the discussion itself, you'll see there's a chat box. If you are watching through laptop or watching through desktop, you can watch and type in the comment at the same time. But if you are watching through forum, the screen might be smaller, but it's fine. You can just type in a very short manner. We interact through the chat itself. And in any case, if you like the things that I share, remember to also click the love button. All right. So these are the few things that I'd like to interact with you guys. Yeah, it is a live session. It's not a recorded session. So live sessions, I hope that there's a lot more interaction with you. And of course, in the meantime, if any questions, feel free to put in the chat. If I pick it up, I will just share my opinion straight away. All right. So let's go. So tonight we were talking about this, the cloud trio. Of course, I don't know Rupert or the guys are here. So Rupert, the guys are some of the companies that I promised to share, like for example, Sofi, or even actually I would like to share about Cloudflare. But yeah, there's too many companies to talk about. But let's start out with this, the cloud trio. These three companies that I will say that I will not say monopolize. These three companies have take the majority market share in terms of like cloud businesses. All right, let's go. So before we start, yep, just to reiterate, these are the sessions that we have run thus far. How many? For 20, 40, 42 sessions. So we have run 42 sessions since the beginning of the day, and then we are ending the year, I believe, in 52 weeks that might have 52 sessions. Yep. So there's 10 more sessions, or this one is the 10, last 10, there's last 9. So throughout the years, we have talked a lot about different markets, different like um, uh, so-called volatilities that we have went through. We have went through the so-called the April bottom. And then right now, we are so-called at a high. So I don't know, anyone of you feel high? Like, wow, my portfolio is growing higher and higher. Yep. Well, let me just switch to smaller. Yeah. Yeah. So, just for those who, I think there's a lot more people streaming in. So if you are first time here, remember to click like, subscribe, and share with your friend if you find this useful. So just a quick update. Market is going higher and higher. Right now we're at an all-time high. And supposedly last week we are in a fear mode. Right now we are in a neutral mode. Why? Because we have our presidency and Trump have finally met, and then they have a good handshake. Is it a handshake or is it a hate fake? Later we will talk about it. All right. So it markets a bit worried about what will come on when these two most important person in the world met. But it seems like things are going fine. I will talk about it in a short while. All right. So a quick so-called go through of the earnings companies that release earnings. So these are companies that released their earnings last week. So from SoFi, United Health, Visa, Booking. Yeah. Also, if you have missed out the United Health sharing, just go to our YouTube channel. We have covered right there. And our Magnificent Seven, like Meta, Microsoft, Alphabet. So these are companies that release results. And Amazon as well. So these are companies that I will talk about in a short while. Microsoft, Alphabet, and Amazon. Not forget there's so-called blockchain company, or what I put it like Bitcoin company like MicroStrategy. Of course, like Coinbase, the crypto exchange. And one of the companies that I've invested, Cloudflare. So there's a lot of companies have released their result. If you like me to check out any companies, feel free to type inside the chat. I will pick up from there. Yep. So this week a lot more. So we have Palantir. So last night, Palantir have like released their result. It's like every time they beat estimates one after another, and their valuation is so high right now. So one of the things that people are worried about Palantir is like when they just met expectation or even below expectation. It might hurt the so-called market valuations, lah, so to say. But let's see whether anyone are interested about it. So other than that, like Shopify, Spotify, AMD, Supermicro, these are so M&E, AMD, Supermicro are small, like the infrastructure, the hardware. Yep, and Qualcomm as well. So one of the companies that we also covered I think last month or last 2 months, we talked about ARM. So if you don't know about ARM, it's a very crazy business in the sense that they make money by licensing. I didn't know about it until Rupert shared me. So if you have any companies that you know that is very interesting, do share with the community as well. Yep. So I got this from Rupert, and yeah, on Thursday there's the trade desk. So we also talk about it. They are in the so-called demand side platform. Yeah. So if you've missed out, go there. MP Material as well, one of the rare earth materials companies that, if you remember, um, I think it's 2 months ago. Yep, when Tim Cook bring a plug to meet Donald Trump, he also mentioned MP Material. Yeah, Figma. All right. Okay. Yeah. Okay. We'll talk about Figma, Palantir, maybe next week. All right. Yep. So these are companies that are releasing result. A lot of company. To be honest, I have no time to watch each and every one. All right. But you cover as much as you can. Yep. So first up, Trump and Xi finally met in South Korea in APEC, and then there's good news and there's not so bad news. All right. So what is the good news? Good news is they finally adjust the war in the sense that I say, okay, so right now, all right, we agree, we still continue to import soybean from US. All right, so they continue to import and have a good handshake. And then Trump say, okay, so if you do that, then I'll lower down your Chinese good tariff. All right, it's from 57 to 47. Yep. So this is not so good news in the sense that hey, it's still high, 57 to 47, like it's still very high. Yep. And next thing is also about the rare earth material. So China have hot in the sense that they will not they will pause the export control for the rare earth material for 1 year. Very specific, for 1 year. Yeah, I don't know what do you think, but for me, I thought he just like to tell Donald Trump, don't anyhow do anything. I can do things back to you after 1 year if you want to do something crazy. Yeah, so it's just 1 year. Okay lah, lower 10%, not bad. Yep, it's still not bad, but it's still very high. Like 47% is very high. But of course, China, the production price is very low. So 47% is still manageable. I don't know, for them. Yep. Lastly, what they have agreed upon is in terms of like war per se, like in terms of war, they say Taiwan as per normal, nothing to do. Just keep it at least. And then yep. So what is the things that are being vague right here is really the commitment. Yeah. The commitment like 1 year. So it's like what? After 1 year, what do you think? After 1 year, if US need more rare earth material, what will happen? Yeah, President Xi looks so unhappy. Exactly. If you like to see how action, it's very funny. When you watch this clip, right, there's a translator happening behind. So you say that, so you heard that Xi Jinping said, "Oh, I'm glad to be here," and then in Chinese, and then there's a translator translate English, and then when Trump shared something, there's a Chinese translator. So there's a translator concurrently happening to translate what each other is sharing. Yeah, but when you look at it, it's a very weird and awkward situation. Very weird. Trump even say, "Oh, this is a very tough negotiator." Ah, very funny. Yeah, tough negotiator. All right. And another piece of good news right here is yes, actually it's not good news per se. It's like no news. Like Fed have really cut the rates on 30th of October, and then is another 25 basis point. But this time round, they have already preempted that the December rate cut might not happen. So this is the not so good news per se right here. All right. So why is it so? I think there's a few reasons. First reason is so right now, yes, the inflation is so-called under control at 3%, not a 2% ideal rate. And another thing is the employment rate. So just before the Fed announcement, you know that government have stopped working. So US government have been stopped working in a sense that the non-essential stuff are not being paid, so they don't need to go work. So the non-essential stuff include the statistic labor. All right. So the statistic uh, for unemployment is not released, and then even uh, for the upcoming one in December, they will not have clear idea how is the unemployment rate about, and then this would make Fed a difficult state to make judgment whether to reduce the rate or not. Yeah, but Jerome Powell, so he just said it. Oh, yes, further reduction is not the conclusion yet, and then it's far from it. So it's like he's just making a state whereby, hey, if anything happen, uh, I already preempted you guys. So this is what they said lah. Yep. So this is a Fed rate reduction. All right. So if you hear me speaking a bit faster, it's because I wish to share whatever I shared tonight, so that you will not hurt me keep coughing. So if it kind of like affected you guys, so sorry about it. I will uh do it as fast as I can. All right. So yep, earnings season is coming. There's a lot of companies. So tonight we will cover three companies. Why I covered these particular three companies is because remember, um 1 month before or 2 months before, we have been talking about AI bubble. If you remember about AI bubble, just type in a one. We have been talking about AI bubble for quite some time. Yeah, even Palantir has been releasing their announced last week. But let's talk about AI bubble in specific of the infrastructure. So OpenAI, Nvidia, or even Oracle, they have been talking about all these like deals, like a circular deal, and then a lot of different leaders, include Sam Altman, include the Citadel CEO, and Ken Giffrin, and also include Jeff Bezos. They're also talking about like AI might be like going to bubble. So what is the thing that I like to highlight right here is in internet era, or even like the Lehman Brother crisis, there's this thing that happening when the bubble happened. It's this thing called leverage. There's a lot of borrowing happening to either fund the business, fund the infrastructure. So this time around, what I want to pick up from all these three companies is this. Yes, AI bubble, so called, like there's a lot of heat going up. A lot of people talk about AI, and a lot of investment happening around. But are all these investments sustainable? And even if the investment put in, do it put the company into jeopardy? This is the thing that I would like to find out. If you follow, just type in a yes. Means, are all these company putting themselves into a very bad situation in order to join this AI race, or in order to grow their AI arm, or in order to have this like market shares they like to get? Yeah, thank you. Yeah, so these are the things that we will go into it, but let's go into specific company one by one, because each of this company, right, their earnings are very very funny. All of these company have a common things that happen, which is there's exceptional item in their earnings. Yeah, what is exceptional item? Means there are things that is not in their day-to-day operation, that they got to like pay more money or lost more money and stuff like that. Yep. So these are the things that happening with these three different company. There's a exceptional loss item. Let's look into it. What is the exceptional loss item that they incur? All right. Yep. So tonight I will not be starting the private committee portion per se. So these three earnings update will give you a lights on how are we going to talk about companies moving forward. Yeah. So if you have not joined it, just feel free to click goodwill.com/join-wp to join our WellPulse private community. And this private community is 990 per month. There's like Eric, there's four session, at least four session, and of course there's a whole lots of recording inside that we talk about ARM, Nvidia, Palantir, Alibaba. So feel free to watch the recording once you join our Well Pulse. All right. So I think some of you guys join as well, and then you have faced some difficulty. Not to worry, you can always text me. So it's either you are in WhatsApp or either you are in the GoodWhale community. Just drop me a text right there. I will so-called support you along the way. All right. Okay. So first off, I arranged this company in terms of like the interesting level and also ownership level. So first, Amazon. I don't have any position in Amazon. So that's why I start off with it first. And of course, Amazon is a huge company, and then it's not that it's less interesting, but to put it in a sense, I am less interested in Amazon compared to Google and Microsoft. Yeah, I should put it that way. Yeah, I'll explain to you why. Yeah. So I'll quickly go through some high level numbers, and then I'll just go into some exceptional numbers. Why? Because this is the portion whereby I'm not going to the company specific. What are they building? What is their product? What is their services? Or even like what is their growth plan and stuff like that. I'll be very specific here. These three companies, the growth portion, I'll just look at their AI services, yeah, cloud services per se. And then in terms of like business outside of their cloud, maybe we'll find some time to talk about it. But right now, let's focus on just their cloud services. So first off, if you look at Amazon net sales, all right, so their net sales have been growing quarter by quarter, right? And then you will foresee quarter four might have some exceptional numbers coming because like quarter four is what? Christmas. People spend money in Christmas. So usually quarter four will be the highest number. But we look at the comparison between quarter four or quarter three 2024 and quarter three 2025, you know that numbers has been increased. But one alarming numbers is here. One of the things about a business is you like the business to have a good cash flow in terms of like running a business, like operating cash flow. You like company to have a growing operating cash flow, means that company have been growing their ability to keep on collecting money. Yeah, just to put it simply. But one of the things whereby some of the companies, yes, they can collect a lot of money, but what if they incur a lot of capex in terms of like capital expenditure? For example, if you run an airline company, most of the time you need to incur a lot of capex, right? You need to buy airplanes. You need to buy airplanes to expand the business. For Amazon, same thing. They need to so-called put in some reinvestment, just to put it in a bit, reinvestment to the business. And let's see, can they cover up their reinvestment using their operating cash flow? So if you look at free cash flow, this is what it means. What is free cash flow? Free cash flow is just basically take operating cash flow, take away capital expenditure, in a sense that they take away investment, PPE, purchase of property and property, plant and equipments. All right. So you can see that actually the number is going down in terms of free cash flow. What happened? Why Amazon free cash flow is going down? If you'd like to understand what happened, just give me a question mark. Hey, why? Why Amazon free cash flow numbers going down? Hey, isn't it their business keep growing? They have a lot of like cloud services. People are paying their business. Why their free cash flow going down? Start from quarter one 2025, or even quarter four, quarter one, quarter two, quarter three. You will see that the purchase of property, plant and equipment, the PPE, have been growing up every single year. This is the trailing 12 months. Means they just take last four quarter, last four quarter, last four quarter, last four quarter, and then they compare it across. So you can see that actually their purchase, plant and equipment have been growing. What happened? They are investing in data centers. They are buying NVIDIA chipsets. They are buying data centers. They are renting data centers. So there's a lot of like I should not put it as renting. They put it as financial leasing. Means they take a huge like contract to lease this space for maybe 15 or 20 years. Yeah. Yeah, is to build data centers. All right. So you can see that actually their numbers have been going up. Yeah. And it grows even faster than their operating cash flow. But let's focus on here. So you can see that operating cash flow has been growing as well. So from 100 billion to 120 billion to 130 billion last 12 months. So the operating cash flow is growing positive, which is positive. All right. But they also need to reinvest to grow their data center. that grow their purchase of PPE is growing faster than operating cash flow. So in other words, this resulted in the shrinking of free cash flow. Yeah, if you get that, just type in the one. Yeah, it's just basically they have a lot of operating cash flow and then they plow back into their investment. All right. So in a, it's still a good news. So first thing, they didn't spend more than what they make per se. They didn't spend more than what they are putting out. All right. So so they collect a lot of cash flow in and then they put back into their investment. So in the end of the day, it's still a positive figure, a positive free cash flow. So this is what you can decipher from here. Yeah. But do you think it is better if they can grow their operating cash flow faster and their purchase, their reinvestment also increase, but not as fast as their operating cash flow? So these are the ideal state. That means I'm growing my operating cash flow, but maybe my investment doesn't go as fast. Yeah. So this is the ideal state. But there's a reason why they reinvest so much money. Yeah, because of competition. Don't know can single digit free cash flow or not. Mm, at the current, they are not investing. They are not burning to like just live one digit lah. Huh? Okay, so what is the exceptional item that Amazon incur? First thing, there's this FTC legal settlement, 2.5 billion. Wow, it's like wow. Suddenly, you need to pay 2.5 billion like a fine. But I felt that it's a tax for running a business. They need to pay a fine to the Federal Trade Commission. All right, so this is 2.5. And you thought this is the end of story for the exceptional item? No, they need to pay another 1.8 billion as well. This is what is it called? The severance cost. It's a cost whereby for United States, I think even in like Singapore or even Malaysia, some of the companies that practice, not all, some companies that practice. So if you are firing certain staff, certain group of people, you need to pay severance. All right. So in Singapore, there's like um there's a rule of thumb lah. So if you work 1 year, the company will pay you half a month of severance pay. Right. So this is Singapore, but I'm not so sure about Amazon or in US how they practice this, but because they need to fire some of the staff, fire some of the team. That's why they need to fork out some of the um, uh, payment, lah, severance pay. All right. So what is interesting right here is this. They say at first we also make assumption lah. So Amazon firing stuff very simple lah. Why? Because they run everything in AI. They need to hire people. Maybe they so-called over hire in the COVID days right now. They just keep letting go people. You know, if you could recall, I think like around 1 year ago, where people talk about like ChatGPT building LM model, they keep like hiring like talents. You heard of news whereby Google, Apple, Amazon, all the tech leaders are hiring each other people and then doubling their pay. But right now, they are firing people. So you know that all these like tech companies sometimes is very I would not put it as cruel, but yeah, you get what I mean. It's a bit heartless lah, in some sense. Everything dollar driven, uh, opportunity driven. Yep. But they also like rebut in the sense that hey, actually this headcount is not really like financial driven or not even AI driven, not even AI driven. Okay, it's just culturally driven. Culturally means they are they are they are looking at some people, they have some cultural differences. I don't know what does cultural driven means, but when he said not AI driven, he said what I felt here or what I decipher from here is they might be another round whereby it's AI driven. I don't know. I don't know why they say so. Yeah, but they just say this is a one-time restructuring fee. So all in all, 2.5 plus 1.8, right, is close to 4.3. 4.3 billion just poof, like that. 4.3 billion. Hey, 4.3 billion. I don't know. In majority of Singapore company, 4.3 billion is like whole year money already. Yep. So, but 4.3 billion for them is like less than a 10%. It's just 2-3%. So if it's just a 2-3%, right? Hey, let me just calculate correctly. 4.3 divided by 180. Yeah, 2.2 plus percent. So if you ask me, I would just say, hey, they just treat this as what? Tax, a cost of running business. I don't know. Yep. But nevertheless, let's come to this. So in the end of the day, they also make some investment, right? So this investment is in Anthropic. Yep. So before this, I didn't put much attention to it, but right now, whereby we are in the AI bubble, AI race, right? You see that Google, they have their own LLM. Oh, what is it called? Google, what is it? Gemini. And then Microsoft, they have invested in OpenAI. So Amazon, they also have one. They invested in Anthropic. So if you learn about Claude, Perplexity, yeah, Anthropic, yeah, is the companies that run this Claude and Perplexity. Yep. And they have vested close to 18% of the company. And because for them, it's less than 20%, so they do need to include the company balance sheet into the business. What they only need to do is they need to so-called uh, report if the investment there's a gain in value. So what they did for Anthropic is, because Anthropic they invested less than 20%, he's not required to put in all the balance sheet or income statement into the company so-called group level. So they need to report their investment gain per se. So Anthropic, there's a 9.5 billion investment gain, but you know that this one, just investment gain. There isn't real cash flow in. If you understand that, just type in one. Yeah, Tesla got grok. Yeah. So these are the thing. So why I raise this? So these two are cash item, means they need to pay cash. But this gain is not cash. Yep. So in the end of the day, yeah. So this is the investment they made, 15 to 19%. They invested 8 billion. All right. So just a quick summary. Also be mindful that the things that I share right here, in the end of the day, we need to see how can we make decision and how can we take advantage, or how can we so-called utilize this information lah. I just put it that way. So how can I? It's not like, oh, it's just information, knowledge sharing, and then that's it. Sorry. So right here, Amazon. I don't need to explain what the company is doing, and then what is the update about. So yep. So first thing, the updates is great. The number is growing. They are reinvesting in business, but they are not using leverage. They are using their operating cash flow. Good news. Another thing whereby, yep, there's some fine that happening around. Yep, but it's just less than 2-3% of their business at the current. I foresee there will be ongoing fine that coming. Yeah, but I think this is a negotiation of them with the government. All right, and then lastly, they have they have vested in Anthropic, means they also somewhat participate in the growth of large language model. I'll just put it that way. All right, so there's these are the few things, and in the end of the day, all the companies they can be very fantastic, very so-called super normal, means like they are very very good high flyer companies, but uh I think it's Warren Buffett or even Charlie Munger, they say sometimes if you invest in some of the so-called great companies, wonderful company, if you pay a very very high valuation, you also be hurt by hurt by the market. In what sense? So for example, let's say the companies is like $100, and then the valuation is super high. It's like 200 times of their price to sales. If compared to their equivalent, it's like maybe 50 times. So 50 to 200, you know that when you drop to 50, you incur close to 75% loss. Yeah, just put it that way. All right. So valuation is very crucial. So how do we see valuations? Very simple. There's a few ways to look at it. So right now, let's look at a more relative manner. You can look at price to sales compared to their historical number. So Amazon price to sales historical number is around 3.3. So if you look at even after the pump of the price after the earnings release, right, is still at 3.9. So the previous high is 4.7. So if you use the historical price to sales, you see that there's some like so-called room in terms of like their historical band. But of course, if you look at the 3 years average, right, it's around 3.4, 3.5. Not too far from their current valuation. So this is Amazon. Right, so if you are interested in Amazon, yep, this is how you can look at it. So this just the quick number one. Yep, so this is Amazon. If you are good with it, Aaron, just type in one, stand from the first one, Amazon. For e-commerce, always use price to sales. Actually, every company's in terms of valuations, we can always use price to sales, but in each segment or in each industry, their average price to sales level is different. So if you look at Amazon, is deemed they are still e-commerce company. The majority or majority of returns is still from the e-commerce segment. So you'll see that their valuation is very close to the e-commerce peers, and their price to sales is always single digit. So if you look at even C Limited, which is the Southeast Asia, Shopee, if I'm not wrong, their valuation is around 6 to 8 price to sales. Yeah, it's rather high because they are building on Southeast Asia story. If you look at the Brazilian Mercado Libre, is also at single digit. Yeah, so it's not to say that every company you look at price to sales, 3 times means super low, and then the other company 10 times means super high. No, you have to look at their industry. Okay, yeah. Yeah, but this particular one, I just look at the company historical price to sales ratio. All right, let's look at number two. Yep, so number two company, Google. All right, so these are this is the company whereby I have been like very very interested since the day that I like to change my phone. Why? Yeah, so I've been considering to switch my phone to Android system, which is under Google. Yeah. Why? Because like Apple phone seems like it's not performing as I wanted to. And then I thought like the Android phone or the various phone that are running using Android system seems like being developed better lah. I just put it that way. Yeah, they have been dealing far more better. Of course, it might be Chinese brand, but yeah, even Xiaomi 17, wow, so much better. Yep. So let's go to Google. So Google, very straightforward. Their revenue grow by 16%. Their diluted EPS grow by 35%. If I tell you their earnings, their bottom line, uh, this earnings 35% is not accurate per se. These earnings can, if we rerun number, it might be 50% and above. If you look at your earnings, right? So every single year, your earnings can grow by 50%. Do you think it's impressive? Yeah. Imagine your salary overnight from last quarter to this quarter, your salary grow by 50%. Do you feel happy? If you feel happy, just type in the one. Wow, thanks for hosting. Yeah, thank you. Yeah. Yeah, John also changed to Google phone, but actually Google phone, I thought it's cheap, but actually it's not cheap. It's not like Sing dollar 1,000 and above. I thought it's cheap. I thought it's like 500-600. No. Google phone is also not cheap. Yeah, yeah. But what I want to talk about is the Google ecosystem. Yep. So there's this Google one that include Gemini, that include your storage. Yeah, these are the things that I'm looking for. Yep. All right, so let's come in with this. So you see that there's this G&A expense that's grow from 3.5 billion to 7.3 billion, suddenly grow up by 100%. Suddenly my running business cost, there's this item that grew by 100%. Hey, what happened? Yep, this thing. There's this antitrust fine of 3.5 billion that's turned out to be 27 per share. Yeah, if you add back this 27 per share, you know that their diluted earning per share is increased by 50%. But 3.5 billion, what is this about? Everyone, give me a question mark. What is this about? Why there's this antitrust fine? Why I keep on paying fine one? What is this about? Why Google need to pay this fine? And how does it affect their earnings? All right. uh, it's a lot of words lah, but let me just explain in a simple manner. All right. So in what happened in Europe? They've been slapped by this antitrust fine, and this antitrust fine basically resulted from their so-called monopoly power per se. So uh, I I think somewhat in the trade desk session, right? We did talk about in terms of like advertising, right? Advertising, there's this supply and demand side. What is supply and demand side? Advertising, if you look at like so-called, you bring back to the olden days, newspaper, right? So newspaper, they are so-called publisher. Publisher, they are the so-called supply side. So they supply this ad space for advertiser, supply side. All right, follow up. So there's this supply side, the publisher, they have a lot of space for you to put on advertisement. So there's this publisher. All right. So there's another side which is demand side. Demand side is advertiser. So let's say I'm McDonald's, I'm Starbucks. All right, to put on my ads, I'm at the demand side. So what is Google doing in between this supply and demand side? So for the publishing side, the supply side. So what Google have done is they so called put or collect all the available space together in this publisher ad server. In other words, so let's say you have like your the Straits Time, the Star newspaper, or even all the different magazine, Ford magazine, all these publishing site, they have a lot of ad space. Google just collect all the ad space together, and then to show people, if you like to run ads, right, instead of going one by one to this different publisher, you just go through me. Yeah, Google. Yeah. So this is the publisher ad site. So the other side, which is the demand side, Google also do the same thing. Oh, McDonald's, you want to put ads, right? Starbucks, you want to put ads, right? So you have so let's gather together, and then we don't need to like so-called like hush hush lah, huh? We just very simple. We just go by bidding system. You come together, you bid with each other. So for example, Starbucks and McDonald's to go to the same place, right? So come together, just bid lah, and then you bid according to price, right? And then I will let the supply side know who is the winner. Then we just connect together. So in other words, Google control the demand side and also the supply side, and they are in the bidder. They also build their ad exchange. So in other words, they control these three party. It's like in 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 a football match or whatever match. They are the coach, they are the referee, and they also supply the the football field. Means they control everything. Yeah. So this is what happened. Yep. But the good thing is, all this happened. Uh, it's not without reason. So all this happened is because Google developed all this themselves. It's not like maybe Microsoft they want to buy Activision Blizzard, or even Adobe want to buy Figma. Yeah, because they didn't develop Figma themselves. They did develop Figma, but they didn't develop as good as Figma. So, so when they want to buy Figma, it got blocked. So what happened to Google is they develop all this themselves. They are not being blocked by antitrust in the sense that they are not blocked because of transaction. They just block because they build up so strong whereby they control all this party. And then European Commission thought that, hey, you are too strong. You just make the competitions lower, that resulted in you controlling the price lah. Yeah. So this is the things that happen. And yeah. So what do you think? Is it a good or bad thing whereby they develop from end to end? That's why we need Bitcoin to decentralize. Yep. No, there's Cloudflare, that one of the invested company. They also talk about this like phenomenon, and then they also talk, hey, a lot of like AI happening, right? If all these AI LM platform that go to crawl all this site, right? In the end of the day, the publisher will lose out. So they also create their own like cryptos lah. Let's talk about it another time. But let's focus on Google tonight. Yeah. So in the end of the day, what European Commission thought is it resulted in higher marketing costs for the advertiser because when they bid, right, Google know what's the price. They will just tell the winner bid, hey, if you want to win the bid, right, just put on 1 cent higher. Yeah, as simple as that. And then it will be lower revenue for a publisher. The publisher will earn lesser money because like they so-called like exposing the bid and us. And then in the end of the day, if like there's a person that controlling the whole market, right, then the competition will hard to happen, and then it will be deemed as unfair for new business to come in. Yeah, so this is what happened. Yep, I have dry cough, right? Yes, exactly. Yep, digital dollar drive. Yeah, it is. Yeah, there's a bug happening around in Singapore. Yeah, even my kid is fallen sick. Yeah, so I need to quickly do this right. Great, so that we end this early, and then yeah, everyone have a good rest. All right. All right. So this 3.5 billion, yep. Does it happen only once? Because they thought they said this is a one-time fee. But historically, since 2017, 18, 19, they have been slapped numerous fine. So 2017, there's a 2.42 billion, 2018, 4.3 billion, 2019, 1.49 billion. All is about their services, from their ads to their shopping to their search kind of like violation per se. Yeah. And then all this not just happen in Europe, but also in US as well. Yeah. So would this one-time fee be happen again? What do you think? Yes or no? Will you think this one-time fee end like this year after I pay 3.5 billion close case? Because I would think as long as they are still quite powerful or influential, the European Commission or even US will still come back to you. Uh, why? What happened? So remember the three different things that they do: the demand side, supply side, and also the ad exchange. So what happened is they have to give up certain play area for new incumbent, or give up certain play area for other people, so that there's a more transparent in the ecosystem. So as long as the business ecosystem is still remain, and then there's no new technologies that switch the advertisement or the programmatic advertisement industry, they will still be deemed as one of the monopoly player lah. So I would say the fine will still keep coming in lah. Right? Yeah. So this is what I thought lah. Yeah. And this is quite good if it's a business for government. Even government, hey, government this year I don't have money. I just find Google some money lah. Hey Google, you did this wrong. Fine you 2 billion. You did that wrong. Fine you 5 billion. Just to cover some pocket money. Like what? Or pocket money for Google, but it's a big money for the government. Okay, yeah. All right, maybe. Yep. So that is internal, right? Fine. But let's go back to the business itself, all right? Because in the day, remember when I started the sessions, what I want to find out is their cloud services, their so-called AI related services, in a sense that is AI a bubble, all right? So let's go into it, right? So remember, for Amazon, the majority revenue is from their e-commerce. For Google, the majority revenue come from search, come from their advertisement space. So you see, like Google Search, YouTube Ads, Google Network, still their majority kind of like revenue source. And they also have their subscription. All right. So for example, Google One. All right. If you're paying for storage, Google One is one of the subscription so-called products. All right. So you can see that actually overall in all their services revenue grew by 14%. 1/4. Okay. Mid teens. Not too bad. But is it interesting? For those who are looking for high growth company or exponential growth company, you say, hey, 14% is not as interesting. But let's look deeper into their cloud revenue. If you look at their cloud revenue, yeah, it's not huge. It's a 15 billion business compared to 87. Their advertisement revenue is just a 15 billion. But if you look at their growth rate, it's at 35%. 35% growth rate. Yeah, the operating margin is as high as 23%. So you can see that actually, it's growing and the operating margin grow further. Operating leverage. Yeah. So this is the thing about a lot of people that talking about a lot of tech companies, they also carve out AI portion. They also carve out cloud portion. So this is what happened. But let's look at Google. All right, wow, 34%. What do you think? Is it a high growth? For me, anything more than 30% is a high growth. 20% year on year is a very high business performance. Yep. So other than that, right, if you look at their so-called quarterly earnings, right, so they mention about this thing. All right. So their AI revenue grow 200%. What is AI revenue means? In other words, so there's this measure that they take lah. So for all the companies, so-called when they want to use their LLM, right? They they need to spend they need to use token. All right. So the token is a term whereby all the AI companies, when they generate certain result, or even they send in some queries, you need to use token to decipher the code, to decipher the message, and then when they output, right, you need to spend token to create the output. Just put it as simple as that. So in other words, token represent revenue for Google. So the more token that people spend, the more revenue that Google will make. All right. So what this mean in terms of their business revenue? So right now, right now, there's this 7 billion token generated per minute. 7 billion token per minute. 7 billion token. Right. So 7 billion token per minute. How does it link to revenue per se? Well, what does like 7 billion token per minute translate in terms of revenue? All right. So let's come back to this screen again. Yep. So if you look at all these numbers, right, a bit small, but it's fine. I'll just articulate out. So you look at GPT, so-called like OpenAI GPT, when they have input and output, right? So input, you need to spend $2.5 per 1 million token. And then if you spend on output, right, output is like $10 per output, all right, per million token. So Gemini is a bit cheaper, like Gemini 2.5 Flash is like 30 cents, right? The Gemini 2.5 Pro is like can up to $10 for output. So in this Gemini API token processing, they didn't mention is it input or output, and then they didn't mention what's the model. All right. So we just take an average number lah. I don't take average, just take simple calculation. So let's say so regardless input or output, I just assume average is $1 per million token. Means right, Google makes $7,000 per minute. 7,000 per minute translate in a year, right? Is close to 4 billion revenue just by the token. 4 billion. Just people just put input, generate output. Input, generate output. Input, generate output. They make 4 billion. If you follow that, just type in a 1. They didn't do anything. They just opened up the platform for people to put in some input, generate some output. They can make 4 billion. Yeah. And then I believe this is just the beginning of the so-called the token processing. Yeah. Just like that, 4 billion. Yeah. Yeah. You can run your own calculation. 7 billion token per minute. Whole year, how many minutes? And then you just take $1 per million token. It's like what? So every minute that you put something, generate out something, they make money. This is the enterprise level. Enterprise level. For user, if you're a free user, yeah, you don't need to pay lah, but someone is paying for you. Yeah. Yeah. In other words, any input that you put in, you see X equivalent to your browser. Just put it that way. So you thought it's free. You're not. You're being you're paying to it. Can sustain or not? Yeah, great question. Business using or a lot of business is a lot of business. Are they like a lot of businesses using this? And then can the business sustain, whereby whenever they generate token, right, they can collect money to cover up their costs or even make revenue? Yeah. So this is a very, very valid question. Yeah, 5G, yeah, can sustain or not? uh, for Google infrastructure side, they have been proven that they 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 can sustain because they are just reinvesting using their cash flow. But throughout the ecosystem, right, application side, can all the application company able to sustain their business or make money? So for example, there's this AI agent called Manus. All right, so I'm using Manus. There's another AI agent called GenSpark. All right, can Manus and GenSpark, both company, able to sustain and continue to grow and able to pay money to Google? That's a very valid question. So I don't have the answer, but I yeah, I'm paying Manus lah. Yeah, I'm paying Manus. Yeah. So very valid question. Yep. Yeah. So let's get back to the capex side. So capex, you see that yeah, also growing like crazy, like 70%, 80% growth in terms of capex. Spend 17 billion, 22 billion, 23 billion on capex. Yeah, is it sustainable for Google? They have shown that with in terms of their net cash from their operating activity, right? So you can see that their same thing, their reinvestment purchase of property and equipment is like in 14, 17, 22, 23 billions, right? Remember the number? 23 billion. So you can see that actually all their investment come from their cash flow from operating activities, and then their free cash flow are still having positive figures, healthy positive figures. So you know that that's also why when a lot of analysts talk about there's AI bubble, there's AI bubble, but what is sustainable right now or makes sense right now is all these company able to support their reinvestment using their own operating cash flow. It's not borrowing from banks, it's basically from their operating businesses. So who hurts? All right. So some would say, hey, so in the end of the day, if all this AI doesn't materialize, right, all this money should be shareholder money, and the shareholder money are being burned to put into like all these like cold storage, not cold storage, like the data centers. Does it make sense or is it worthwhile to reinvest? So Google investor, any Google investor here, maybe you're a share. Do you think this figure or this reinvestment makes sense if you are a shareholder? The more I see, the more I want to buy Nvidia. Yeah. Yeah, please do so. If Nvidia need to create chip, they need to look for TSMC, and TSMC need to produce chip, they need to look for ASML. Yep. Yeah, exactly. Yeah, exactly the fire journey. All right. So this is the reason why when we look at the business, right, we are not looking just Google itself as an investment opportunity. We might look it as an influence for other companies that you like to invest. All right. So in the end of the day, yep. So there's a fine, there's 3.5 billion fine. If there isn't 3.5 billion fine, right, actually their earnings per share, right, could have grown 50%. Yep. And if you look at the share price, the share price reflected the market positivity or the market hype of looking at all this business. So you can see that there's a rocket up or from their share price lah, huh? So valuation, come back to valuation. So for Google, valuations is for their so-called like the price to sales band, right, is between 1.6 to 4.2 times. All right. And their 3-year average is at 3 times. All right. So if you look at 3 times of price to sales valuation, right? Right now it's close to 4 times, right? Their share price should be around $200 for price to sales 3 times. If you follow, just type in a 3. Yeah, price to sales 3 times is $200. So Google right now is $280. You know that 200 and 300 is close to a 50% overvalue lah. Yep. Yeah. But if you look at their so-called discounted cash flow, so just now price to sales valuation is a relative valuation. You can also use the discounted cash flow valuation. It's a so-called absolute kind of like figures like just put it that way. So if you like to look at the discounted cash flow, right, by projecting their free cash flow growth. So let's say you are looking at their free cash flow growth for 12%. Right. So I just simply take their revenue growth lah. I just Just assume revenue growth just distill down to a free cash flow. I just make an assumption and then grow 12% every year. If they grow 12% every year for the next 5 years and perpetually go for 5%, what is their evaluations with the discount rate of 9.5%? So if that with that itself, right, their implied price per share is 190, so very close to 200. So if you look at Google, so these are the so-called fair value valuations, like from price to sales and also discounted cash flow. All right. So if you follow, everyone just type in to the second company, Google. So I shared the uh the business segment, the exceptional item, and then also the cloud segment. All right. So I just specifically go into cloud segment, just like how I started the session. I said, hey, I just go to cloud segment. Right. So so tonight I will not go into the private community. Let's cover up everything in this YouTube lah. So you don't need to go here and there. All right. Okay. So for those private community, if you're okay, just type in the okay. Then you don't need to go to go from YouTube to Zoom lah. Why? Because I also don't think I can speak further than like 5-10 minutes. My throat is like calling me. Yeah, so I rather like conclude it at YouTube lah. Huh? So just to re-highlight again. So all of these things. So I initially planned to just share like Amazon in the public, and then Google and Microsoft in private community. Why? Because Microsoft, I personally have stake in it. That's why I'm biased. Just put it that way, I'm biased. So when I'm biased, I'll just say good word, more good words per se. Yep. And then it may not be as neutral. So that's why I like to share it in private content. But because I just like touch and go, so I just share it in today right here. And then for Google, I'm looking to invest or take a stake in it. Yep. Yeah. The fact that I like to switch from Apple to Google. That's explained why my intention is there. Huh? Yep. So if you'd like to follow us, you'd like to follow our community, just make sure that you go to click.google.com/join-wp to claim your 1 month free trial. So this is a 1 month free trial that you can just join our future 4 session from the so so from mid of the year to now, I've been doing every single month. So for those that are following me, you know that I always here for the every single Tuesday, and then every single live Tuesday. So at least you have 4. If there's a bonus, there will be 5. Depends on which month or which day you are in. And of course, other than that, all the recordings are there. So make sure after you start, right, just go in the exclusive portion to watch the previous one. And for especially for tonight, just go to the ARM session and TDD session. Why? Because I think ARM is Wednesday, TDD is Thursday. So so you like to have some idea what the company does before the earnings result, ARM and TDD. All right. Okay, so let's go to Microsoft. So Microsoft, very boring figures, very boring, like in the teens, teens, growing in the teens. All right, okay, growing. Very boring. Microsoft, very boring one. This piece is very boring. Okay, capex. Okay, 2022, 21, 24. Oh, suddenly 34 billion capex. What happened to the capex? All right, but one interesting about Microsoft capex, right? They differentiate between cash paid for property and equipment and capital expenditure. So let's look into it. So the capital expenditure include asset acquired under finance lease of 34.9 billion. So what does it mean? So they segregate this long-lived assets finance lease here, 11.1 billion. And then the total cash paid for property, plant, and equipment is 19.4 billion. So what does it mean for this 11 billion? All right. It simply means that, right, this 11 billion is spent out for 15 years for their data centers. And anything more than that 11.1 billion, right, the the item lifespan might be shorter. So for example, let's say based on Moore's law, your so-called your chip advanced by every 2 years, for example. So every 2 years, right, you need to change the chip in your data center. I just put it very simply. It might not be 2 years, it might be longer. I just put it simply. So in other words, so within these 15 years, right, there will be more reinvestment into their existing data center. All right. So in other words, Microsoft, they have existing data center, and part of their existing data center, they need to reinvest to upgrade their chips. So there's new data center, they need to buy chip from NVIDIA, for example, and their old data center, they need to buy chip to replace. You get what I mean? If you get what I mean, just type in the one. So that's why there's a huge requirement of chip upgrading. Yeah, so this is what I see from reading this simple segment. So there's 11 billion is for the long-lived asset, which is the data center. The asset will support monetization for the next 15 years. They tell you the data centers is for 15 years. And anything on top of that is for a shorter term one. Yeah. So it's like GPU and CPU which support Azure platform. Roughly half of the capex were for short-lived asset, which is the chipset. Yeah. So 34 billion, so roughly 17 billion is to buy chip. Yeah. So the chip is not just for their new data center, it might be also for their older one. All right. Yep. So remember, I would like to look at their cloud business, right? So you can see that a Microsoft Cloud is like 22%. Not as fast as Google. And what I will highlight here is this is Microsoft Cloud. So this Microsoft Cloud, right? They include like Microsoft 365, Dynamic 365 that use like cloud services. But if you look more specific to so this is like 365, this Dynamic is the ERP system lah, and LinkedIn is for the business professional. But let's look at Azure per se. For Azure and the cloud services revenue, right, the growth is at 33%. Is somewhat similar to Google. If you follow, just type in the one. So you know that the cloud, the AI so-called server side kind of business growth, right, is standing at 30 over percent. Yeah, standing at 30 over percent. Yeah. Yeah. So yes, their cloud revenue is growing. And if you look at their capex, right? So 24 billion, 34 billion, you know that it can easily cover from their net income. Easily cover. All right. Does I show cash flow here? Never mind. Later I'll show a table that compare cash flow and also their reinvestment. So first thing, Microsoft also have an exceptional item. They have made a huge losses. What is the losses? So what happened is Microsoft, they've invested in OpenAI, and then they have 27% stake in it. In accounting rules, they need to take in like the P&L of OpenAI and put under Microsoft. So in other words, what OpenAI in terms of like loss incur, they need to put in Microsoft as well. So if you look at Microsoft books, right, there's a 4.1 billion losses right there. And where this 4.1 billion come from? OpenAI. Yeah. So OpenAI have been making a lot of losses and in billions. All right. And then Microsoft recognized losses of close to 3.1 billion in a quarter, 3.1 billion. So know that our OpenAI is losing money. So just now remember who said, is this sustainable? Yeah, this is the question. Right now, OpenAI is losing money and in billions. 3.1 billion. All right. So it's like 27%. Oh, so called. So let's work backwards lah. So let's say Microsoft take 27%, right? So OpenAI for this quarter itself, they are losing 11 billion. Yeah, and it will make more losses in future. Yeah, it means they need more money. They need more money to burn. All right. So if you look at OpenAI alone itself, they are losing like 11 billion a year. Yep. And so Microsoft very simple because they have 27%. They need to take this equity method and then put inside their balance sheets, their P&L. Right. So one of the things that Microsoft also raised is like moving forward, they will also separate two books, not separate two books. They will have this number which is exclude OpenAI. Yeah, because OpenAI is losing money now. It doesn't look good for Microsoft books. And I think it's very interesting thing that happen. So right now, Azure have capacity constraint, and this has resulted in loss of revenue. Shareholder, yeah, capacity constraint, bad. But good news is you know that demand is higher than supply. So Azure have to keep up with demands lah. So that's why they need to reinvest into business. That's a good thing. But of course, if I can capture the revenue, that's the best lah. Yeah. So if you recall that a few days ago, OpenAI have this announcement whereby they have this public structure company, and then there's this non-profit company. So what happened is, I I think it's not. I think it's like right now they are building towards the road to IPO, the road to listing. So that's why they need to restructure the business. So within this restructure, let's look at Microsoft first. Then they look at OpenAI restructure. So Microsoft, what happened and uh what Microsoft investors have to gain from this. So first thing, so when you go for IPO, um, so there's some alignment, there's some agreements in terms of this key partnership. So the key partnership is the revenue share and exclusive right for Azure until AGI in 2030. Means for their AGI, they need to so-called like always put Microsoft first. So in other words, for AGI, right, you OpenAI, you cannot go to Amazon first. You have to come to Azure first. You cannot go to GCP. You cannot Azure first until AGI or through 2030. So whichever comes first, lah. Yep. So this is the thing that they have some partnership term, and then there's exclusivity for Azure until AGI or 2030. So until AGI, yep. So Microsoft have a say, and yep. And there's 250 billion commitment, so they lock in some revenue lah from there. So this is Microsoft. They lock in 250 billion from OpenAI. So yes, OpenAI is losing 11 billion. So they want to lock in 250 billion Azure commitment. So if you follow, just type in the one. Yeah, 11 billion a year seems like a pain, but you have to commit 250 billion commitment to Azure. Yeah, so this is the interesting thing about business partnership. Yeah, you can lose money, but if you need to expand your business, right, expand through me first, and then you commit 250 billion. Yeah, Open said, your service cannot, then look for more partnership. More interested in story between OpenAI and Elon Musk. Yeah, I think there's a lot of insights lah, but I think in Chinese 各说各话 means that everyone is just saying from their perspective. No one have the full picture until there's a third party neutral one that have two sides of the story. Yeah, but for this investment that Microsoft have put in, I think it's in like 15, 16 billion if I'm not wrong. Right now it's valued at 150 billion in terms of their ownership. So that's why Stan say right now we are standing at 10 times return lah. Yeah, yeah. OpenAI restructure Microsoft as the so yeah, they are going for listing. So let's close off this session. So Microsoft right now is like standing at $517. So their valuation band price to sales is different from Google and different from e-commerce because they are more software SaaS business, SaaS software SaaS business. So software SaaS business, right? Their price to sales is in the teens per se, like low teens to mid teens. All right. But it went as low as 7 in like April, and right now climb out to 14 times. All right, so the average is like around 12 times lah. Yep. So if you look at Microsoft, if you take the in the mid 10 time price to sales, the share price is around like 400. Share price is around 400. It's 10 times price. So let me just calculate 13. So I just take 517 times 10 divided by 13. Yeah, around 400. Yeah, around 400. Yeah, around 400 for 10 times price to sales. And then if you look at their discounted cash flow, so same thing. I take 15%, their average revenue growth, 15% growth for the next 5 years, and then 4 years perpetually. So the implied share price also around 403, right? So you have the business, you have their cloud server kind of like numbers. You have understand what is the one-off about. So when the one-off come in again next quarter, you know that it might be coming from OpenAI. All right. So this is a third company. If you follow, just having a tree, third company. Yep. So there's a lot more earnings coming. Yep. So these are the things that I've gathered. I just gathered like first thing, the accessory item. Second thing, which is their AI investment. Is it sufficient from their own operating cash flow? Is it a bubble? So at per current, for their own company sustenance is still okay. But likewise, if you look at OpenAI, yeah, they are burning money. Yep. So these are the cloud comparison. So if you look at Amazon, Microsoft, and Apple, right? So you know that it actually Microsoft this number is a bit like they take in like Microsoft 365 number add together lah. Yep. So if you just pure Azure, right? This is not pure Azure revenue. Yeah, this is not pure Azure revenue. So I just put in Microsoft is in between Amazon and Google. All right. But in terms of that, their cloud revenue growth, right? Apple and Microsoft is growing faster. Amazon is growing slower. Yeah. And in terms of reinvestment, right, you'll see that their capex. Yeah. So Alphabet 49 operating cash flow, 24 reinvestment. Right? Okay. 45 reinvest 35. Yeah. So this is 130 because they just put in trailing 12 months. So you just divide by 4. So 130 divided by 4 is 32.5. So you can see that it's very close to using their operating cash flow. All right. Okay. So yep. So this is the third one. So I've been of AI stuff to me analyzing. So if you have not started Manus.ai, this is the code. Manus AI is very crazily so for me it's very crazily good. So there's other, but I'm using Manus. So if you have not used it, just scan this QR code and then just enjoy the 500 credit. If I'm not wrong, there might be more. Yep. So depends on. I also know sometimes they get promotion. How about 𝐷𝐷𝐿? So today I will not be doing sharing about 𝐷𝐷𝐿. So 𝐷𝐷𝐿 is also going if I know right, also 30 to 40%. If I can't remember the exact number, let's start look at it again. So Ming 09240. So when is Alibaba next earning? Alibaba earning core. November 13 or 14. Yeah. So let's look at Alibaba. I think it's like in next 2 weeks. November 13 or 14. Let's look at it at next 2 weeks. Then we talk about Alibaba and then we compare side by side. But Alibaba is very straightforward. It's mainly within China. Alibaba mainly within China. Yeah. Yeah, but it's still a great market, a big market to grow. So yep, I met Kev, I met Joanne. I supposed to meet Hui Kwang and Wei Chao. Yeah, you guys. Yeah. But oh no, not Hui Kwang. Shi Leong and Wei Chao. Shi Leong and Wei Chao. Yeah. But let's and on I think 26th or 27th, the Wednesday, I'll be meeting Hui Kwang and Xiao Yep. Yeah. So anyone in KL, 26th November, evening around 7:30 to 9:30, I'll be meeting Hui Kwang. What is it called? The morning? It's in PJ, like it's in PJ. Yeah. Waiting. Yeah. And we have some time to sit down. Kun, you are coming KL, meh? Kun, you can meet anytime. Or sometimes you also come to Singapore, right? The Saturday one, let's arrange again. Si Leong and Wei Chao. Hey, Kun, if you are open, right? Actually, right now I have to go JB every 2 weeks to buy. Not every not 2 weeks like. So right now I stretch to 1 month. 3 weeks to 1 month I need to go JB to buy milk powder. When I go buy milk powder, can I let you know? Yeah, but I also very quick turnaround. So go in, buy, then come back. But if you meet you right, I go in, meet you like 1-2 hours, then come back. Yeah, usually weekday one lah, daytime. I think you'll find lah. You just need to wake up early. Yeah, because I go in like maybe 10 o'clock, 9, 10 o'clock. Yeah, come back by afternoon lunch. I help you buy. Also can more. I also can. All right. So yep, so that's all for tonight. Remember, like, subscribe, and share it to a friend. And then every share that you made, I really appreciate that. Also, really do subscribe to the channel because every Thursday and every Monday there was new videos that come out from this clip, and I'll be planning for more content coming up. So make sure that you watch out this space. Share it to your friends, share it to your WhatsApp, share it through your IG, Google, whatever. Yeah, share it out. If you think this is great, please help me to share this good content out. And if you think that some things that is still lack of some excitement or some insights, just text me, and then I'll improve from there. So 1% a day, likewise with our portfolio, let's invest better, grow better, and yeah, in the end of the day, let's enjoy our fruit of labor and enjoy life. Right? Do one session on JB Makan. All right. So yep. So far, actually, I like to go through all this. I just put in a placeholder, all this company name. Yep. But never mind. We have more time, and then we can talk about it. Yep. Thanks, Diana. Yeah, it's just some itchy throat lah. All right, so I'll end tonight. I will not go to the private community session. So once again, thanks for joining us tonight. Every Tuesday, 8 p.m. at YouTube, GoodWhale channel. I'll see you again next week. So next week, there's more earnings coming, and then I'll share with you a lot more insights if you love to. And then, yep, I really enjoy the session right here. Once again, thank you, and see you next week. Bye bye.